Hello guys, how are you doing today? Welcome to another training session. Welcome to another tutorial. This tutorial is the one to introduce you officially into the trading space. Okay, this tutorial is to help you to identify trends. So I will call this tutorial identification of trends. So if you are a beginner in the trading realm, this video is for you. But before we proceed, I want to point out a few things, like things that will help you to learn. First of all, is how I speak. Sometimes I try to break up my words so that you would not get it mixed up. And secondly, I am an Igbo man. I'm an Igbo man, so you wouldn't expect me to be speaking like the Americans and stuff like that. But whenever I am communicating with you, the aim of my communication with you is to break down things as and make it as clear as possible so that when you are watching it, you will be able to get the things and emphasize on what I am trying to say so that everything will be easier for you. So I do this video for my friends. I do this video for Nigerians. I do this video for anybody around the world who is willing to take up trading as a career, or who is willing to start understanding the chart when you are looking at one. So that being said, I would love you to pay maximum attention to this lesson so that everything will be making sense to you as it is supposed to be. All right, so we are going to be looking at an uptrend, a downtrend, and a sideways trend. These are basically the three trends of the market. When you pull up a chart, you are going to be either seeing an uptrend, or seeing a downtrend, or seeing a sideways trend. So whichever one that you are looking at, how do you identify this trend and be like, okay, what I'm looking at is as an uptrend, what I'm looking at is a downtrend? How do you know the trend that you're looking at? That is what you need to know first as a trader, or one of the things that you will know as a trader to enable you to make money in the market, or to be on the safer side per se, because we have not started talking about making money already. I want us to focus on the important things, identification of trends, and you already know that the trend is your friend. So how do you identify a trend? An uptrend. In Forex, an uptrend refers to a sustained increase in the price of a currency pair. It is characterized by higher highs and higher lows over a period of time. So when you are looking at a chart and you are seeing that the price of that asset is increasing, the asset is probably in an uptrend. Okay, so once you are seeing that in an uptrend, you will notice that the chart is making higher highs and higher lows. Basically, that is how the chart works, or that is how it goes, because it does not go in a straight line. The chart does not go straight up. No, before a trend goes up, it has to make a higher high, a higher low, a higher high, a higher low, just like a zigzag that is going up. That is how we recognize an uptrend. So what are the features of this uptrend that we are talking about? We say that number one is higher peaks and troughs. Higher peaks and troughs. In an uptrend, each successive peak, that is the highest point, and trough, that is the lowest point, is higher than the ones found earlier in the trend. The price zigzags upwards, creating new higher highs over time. So the peak is the high and the trough is the low of that particular trend that you are looking at. And when you're looking at an uptrend, you will notice that each peak goes higher than the previous one, and each trough goes higher, than the previous one, so making it a higher high and a higher low consecutively. All right. Number two, identify an uptrend. How do you identify an uptrend? When you open your chart, look for higher highs and higher lows on the chart, on the price chart. Traders use trend lines drawn along rising swing lows to confirm an uptrend. An uptrend provides an opportunity to profit from rising asset prices. So I want to emphasize on this second line. Traders use trend lines drawn along rising swing lows to confirm an uptrend. So by drawing a trend line on the swing lows of a chart, you will be able to identify it as an uptrend. So once you pull out your trend line tool and place it on the higher swing lows, we are talking about the troughs now. When you place it on the troughs, you will notice that price will sit properly on those troughs, and that will give you an uptrend that you're looking at. Number three is the signs of reversal. If the price fails to create higher swing highs and lows, that means at the point where the price stops to create the higher highs and the higher lows that you know already, it is a signal for a potential downtrend or change in direction. So as you are observing your chart creating higher highs and higher lows, you are supposed to observe to know when price stops creating the higher lows that you use to identify the uptrend. So when price breaks that higher low and starts going down, you will know that the market has changed from an uptrend to a downtrend. And you should be cautious when the trend gets weak. And remember that trends are temporary. The market will not be in an uptrend forever. So it can change within any point in time. So it is important that you risk properly. Right? So this is like the basic things that you need to identify an uptrend. And I'm going to show you on the chart using gold price action an uptrend and what it looks like. We are going to identify these three things that I listed already as an example of what an uptrend looks like. So first of all, let us go to price action chart and look at the higher peaks and troughs of an uptrend and see what it looks like. All right, so this is gold price action on 15 minutes chart, and obviously it is in an uptrend. As you can see, the price is trending higher. How do you know? First of all, if you watch my cursor right here, for example, at the extreme right, you will see that price used to be 211085, but as price kept trending higher and higher, you will see that the highest point of this chart is 2194.77. So probably if you had bought this gold at 2112, for example, you'll be making profit at this point. All right, so but let us go into the peaks and the troughs. One thing I need you to know when you are looking at a chart is that the important points to look at is these high points. Every other thing is noise. Continue to look at these high points that are outside the price action. This point, all these low points, all these points, all these points. These are the peaks and the troughs of an uptrend. Okay, don't look within the price action so that you don't get confused. So for the sake of this chart, let us identify the peaks and troughs of this chart. So let us assume that this used to be a low. So this is a low, right? Remember, we are looking at this low point. This is a low, and this is a high. So we are looking at the trough and the peak. Remember, the next peak and the trough should be higher than these two that we have already identified. All right, so if you are going to choose a next trough, make sure that it is higher than this one. That is going to make it a higher low. Okay, so which other troughs are higher than this one? This is higher than this one, so this is obviously a higher low. This is also a higher low to this one and a higher low to this one. Okay, and what about this high? This high right here. Okay, let me just identify this for you. This is a high right here. So I think I should use the trend line too. So you are going to look for a high that is higher than this one that you have already marked out. So which high is higher than this high? This high. So this is a higher high, another peak that is higher than the previous one. And this low, we already have another higher low, another higher low, another higher low, another higher low. So this is a higher high. This high right here is higher than this one here, so we will call it a higher high. Identify. If you look closely, you will see that this high, there is a smaller high here and there is another high here, but the point is that you make sure that each high you are choosing is higher than the previous one that you have already identified. That is just the trick around it. So which other high? This high, it is higher than this one, so price is actually making another higher high here and another higher low, another higher low, another higher low, another higher low. So which high is higher than this high? Is this one right here. So the price is gradually breaking the previous highs and making higher highs. Okay, so this one broke this previous high and this low is higher than this low, so that is a higher low obviously. So as we progress, you will notice that price kept on breaking swing highs. Okay, once the price swings high and breaks the previous high, that new swing high is the higher high and that new swing low is the higher low. So that is basically how the price continues to go up. So which other high is higher than this one? This high. So mark this one as an uptrend, as a higher high, and see another high here. Let us also indicate this one. Okay, so price is basically trending up right here. There is no way of confusing it. You already see that it kept on forming new highs that breaks the previous one, and that the higher lows is, and that the lows, they are higher than the previous lows, just like what you are seeing from here. This low is higher than this low, this low is higher than this low, this low is higher than all these lows, this low is higher than all these lows, this low is higher. So if you are progressing upward, you will notice that the lows are higher than the previous ones. That is basically what I want to explain to you about the peaks and the troughs. Now, once you want to use trend lines to identify an uptrend, the lesson says that you are going to use trend lines to draw along rising swing lows. Look at it right here. Traders use trend lines drawn along rising swing lows to confirm an uptrend. So once you pull up your trend line tool, you are going to draw it across the swing lows, and remember that the swing lows are always rising higher. So I want to demonstrate this on a chart for you so that you will see how to use a trend tool line to identify an uptrend by drawing a line along the swing lows. Okay, so for this uptrend right here, this is our trend tool line. This is our trend line tool, sorry. This is our trend line tool. So if you want to actually use it to identify an uptrend, you simply click on it and click here. Once you click here, it gives you a line that you can extend to any point in the chart. So for the sake of identifying an uptrend, once you click on that swing low, you drag it along the swing low points, and once you click another place in the chart, it will give you a new swing low. So I think we should go like this. So this is actually showing you that we are in an uptrend. Some people may decide to actually get more swing lows by maybe coming inside a little bit, so that we will have this point, this point, this point. It's actually left here, but it is still fine. There is no neat way of drawing it. So far we are still on point, because price action is not perfect. So this is another place that the price is touching on this trend line too. So this is a perfect uptrend. And remember, once you are able to draw this trend line too on the low, that means you have already started to successfully identify an uptrend and know what an uptrend looks like. So if there is any confusion about an uptrend, you can try to read more books and watch more videos online, so that you will be clear on what an uptrend is, because this is actually what you will need when you want to enter a position in a trending market that is going up. You want to actually buy on this swing low points that you are seeing right here. Okay, so that is basically it for a an uptrend. So I will go over to explain what a downtrend is and what it looks like. What is a downtrend? In Forex, a downtrend refers to a sustained decrease in the price of a currency pair. It is characterized by lower highs and lower lows over a certain period of time. Remember, it is the opposite of the uptrend. A downtrend is basically creating new lower highs and lower lows for you. And here are the features of a downtrend. In a downtrend, each successive peak, that's the highest point, and the trough, that's the lowest point, is lower than the ones found earlier in the trend. So if you can actually make a picture of what a downtrend looks like in your head, and it tells you that each successive peak is lower than the previous one, that means you will be dreaming of something that keeps going down, because the high and the low is lower than the previous one. So the price zigzags downward, creating new lows over time. Identifying a downtrend, you look for lower highs and lower lows in a price chart. Traders use trend lines drawn along falling swing highs to confirm a downtrend. So just like in an uptrend, when you want to confirm an uptrend, you pull out your trend line tool and draw your trend line across rising swing lows, right? The opposite in a downtrend is actually pulling up that same trend tool line and drawing it across falling swing highs, because that is where the resistance is. The highs is the resistance where price gets to before continuing to fall. So a downtrend provides an opportunity for you to profit from a falling market asset price. Okay, if you are in a downtrend and you want to, if the market is in a downtrend and you want to short it, you are going to profit from the price action when the price is going down. You make your profit when the price is going down. So what are the signs of the reversal of a downtrend? If price stops to create lower swing highs and lows, eventually it is a sign of a potential uptrend or a change in trend direction. So you have to be cautious for a weakened downtrend, because once a downtrend comes to an end, price will start to create new highs and new lows. That means higher highs and higher lows, which is definitely what an uptrend is defined as. Okay, so you remember that no trend is temporal. If there has been a downtrend for a sustainable amount of time, you should consider waiting for price to know whether price is trying to start a new trend or to consolidate and make a new kind of trend. So I will pull up another chart on gold USD to show you what an actual downtrend looks like. It has been long that gold actually formed a downtrend. Okay, let's work with this right here. So what you are seeing right here now is a downtrend. Okay, and I'll try to explain it using what I have already read for you so that you can actualize the meaning. Okay, so number one is identification of a downtrend. We say that each successive peak, that's the highest point, and the trough is lower than the ones found earlier in the trend. This is the peak, so let us call it our high, and this is the trough, so let us call it our low. Okay, so whatever we are doing, we are respecting this because this is where we started to identify this our downtrend. So another high point that you see is this one, and it is lower than this high, so we call this a higher low. We call this a lower high, and now this particular low right here is lower than this one, so we call it a lower low because this low is lower than the previous one, so this is a lower low. Okay, now this is another high. This is a lower high because eventually if you look closely you will see that it is lower than this one slightly, and it is obviously lower than this high right here, so we call this high a lower high. This is the peak, and it is low and lower than this one and this one, so this is our lower high. And now where is the next lower low? The next lower low is this one. Why? Because this low right here got broken and price formed a whole new low around here, so this is our new low, and this is also our new high because this high is lower than this high, and this high also, if you identify it, it is still a lower high. Why? Because it is lower than this high. So where is our next lower low? Our next lower low is this one, because if you draw out a trend line tool here, you will notice that the price kind of formed three equal lows, 1, 2, 3 right here. So the next low that is lower than these three lows is this low right here. So this is our lower low here. And which high is lower than this high right here? You can take this high, you can take this high, you can take this high, you can take this high. Why? Because all these highs that you are looking at right here is lower than this high, so price is consecutively making new lows and new lower highs. And the next thing that we are going to talk about is identification of a downtrend, and we say that in order to identify a downtrend using a trend tool line, you draw lines along falling swing highs to confirm a downtrend. Remember how we confirmed the uptrend with our trend tool line? We used it to draw along rising swing lows, right? Now in a downtrend, if you want to confirm a downtrend, you are going to use that trend tool line. If you grab our trend tool line, we are going to draw it along our falling swing highs like this. Okay, so this right here is our trend tool line that will confirm our downtrend. So this tells you that the price action is in a downtrend, and this tells you that the price kept kept breaking the previous lows. So this is our lower low, this is our low, this is our lower low, this is our lower low, and since all these lows are equal, we decided to call all of them one low. But the next obvious low that we got to see was this one, and as you can see, price immediately dropped all the way down here to break even this low again. So this is our new lower low and formed a new low right here. So the price is in a downtrend and it continued to move lower. So once you open your chart, try to look at these highs and the outer part of the chart. They are called swing points. You look at the swing points to know whether price is breaking them to the upside or breaking them to the downside. That is basically what you need to identify once you are looking at the chart as a newbie or somebody that is still confused about what the market is trying to do. Okay, now the third trend of the market is the sideways trend. What is a sideways trend? A sideways trend, it is identified on chart by a series of flat highs and flat lows. The lows and the highs are flat, and the general direction of price movement over time is sideways. Imagine that the price of an asset is making flat highs and flat lows and going with time, as the price action kept on forming, it will continue to go sideways. Remember, as time is going, price action is going, and once they are stuck in that box of equal highs and equal lows and keeps on moving, it is actually moving sideways from left to right, and this typically occurs during the time of consolidation before price continues a prior trend or reverses into a new trend. What this is saying is that once the price action is in a sideways trend, it is called a period of consolidation. So if you are discussing with your trading friends and they get to ask you, did you trade today? And you'll be like, no, the market is consolidating. Your friend will know that you mean that the price action is in a sideways trend and there is no defined trend for that price action. So once the market is consolidating, you have to wait and check for which direction price is going to break to. So two things will happen when price consolidates. When price consolidates, price either wants to continue the trend that it is, like it wants to continue the trend that it has been going through as the prior trend. That means if price was in an uptrend and consolidates and breaks higher, that is one option. Now price can be trending higher and consolidate and go lower. So it either continues a prior trend or reverses into a new trend. So that is why you don't trade during this time, because that is when you'll be skeptical, or when you should be skeptical, because you don't know whether price action wants to continue the trend that you saw before that consolidation, or it wants to reverse to a whole new trend. So it is not advisable to trade when the price is trending sideways. Remember that the trend is your friend. So it's why a sideways trend is not the one that you trade. And a sideways price trend is commonly known as a horizontal trend. Why? Because once you take out your trend 2 line and put it on the flat highs and on the flat lows, it will form something like a horizontal trend for you. I mean, the market is stuck in a box of that high and that low. So what I'm going to do now is I'll pull up a chart of a horizontal trend so that you will see what the market looks like when it is not going anywhere. And once you get a hold of what an uptrend and a downtrend and a sideways trend is, you have a whole new level of up hand in the market. It's called upper hand, right? You have a whole new level of upper hand in the market, so that you don't just come and dash the market your money. So I would have loved to call this. But I want a more pronounced price action. That it is tie stock in a box. I think we should work with this one. Let us work with this one. So I'll just pull up my trend 2 line and point out these lows right here. Let me just use my horizontal 2 line so that the line will be more straight. Okay, so I'll take this and I'll use the horizontal ray for this. So I'll choose it. So looking at this price action right here, you will notice that the market is actually stuck in a box. The market, it was not trending to any direction. Why? Because it made highs here and it makes lows here, and it makes another high here and another high here and another low here before it got broken to the lower side. Okay, so but looking at this price action, you will see that the market is actually not going anywhere. This is a sideways trend. Why? Because as time kept on going, it is as if the market is just going on a straight line to the left, to the right, sorry. The market was going on a straight line to the right, and you cannot identify any good higher highs and higher lows here. If you tried to trade this kind of price action, you will not get an exact feeling of what a trend is, because if you wanted to identify it as an uptrend and you pull out your trend line and maybe try to take these lows right here, you will see that it was not a sustained uptrend because it got broken right here at this point. So we are not going to call this an uptrend. So what about when we try to call it a downtrend? If you want to mark our swing, our lower highs, you will see that it is not actually giving us what we would know as an uptrend. In fact, when you connect these points like this, it is going to give you like another kind of a channel in price action. So trading this is actually a kind of a risky trade, which I will not advise you to do. Okay, so this is actually meant for pro traders that know how to navigate the market. But as a beginner, please avoid any market that does not have a kind of a pronounced price action to identify a trend for you, so that you don't just burst into the market and wound yourself. Okay, so what I'm going to tell you is that you ignore these trends that you don't know where they are trending to, because they are periods of consolidation and you don't trade any period of consolidation. Okay, so for the sake of this chart, God, I hate this when a message pops up. I want to remove WhatsApp from my phone, from my system. God. So that is basically what you need to know about a downtrend, an uptrend, and a sideways trend. I believe that is the first thing that you need to know once you get yourself ready to know what is really the going on in the market. So once you pull up your chart from TradingView and you want to look at charts, the first thing you should do is to find out the trend. Is this an uptrend that I'm looking at? Is this a downtrend that I'm looking at? Is this a sideways trend that I'm looking at? So once you are able to do that, you will now have to be able to take the next step, that is finding where you should either go, whether you should buy from this point or whether you should sell from this point. So I will leave you to go and practice on these trends of the market, because if you are able to identify the trend, that means there is nothing that you cannot understand again in the market should you continue to practice. So the point of going into trading is actually to escape the matrix or to live outside the matrix. Remember, from an economic point of view, you are stuck in the matrix of the government, in a way that if you don't work, you are not going to be paid, right? But if you're able to understand these concepts and trade yourself out of the economic system of your country, you would notice that life would be different for you. Once you learn how to trade, you don't need to work for anybody to trade. You don't need to rely on the weakness or the strength of your economy in order to make money. Just like Nigeria, for example, if you are trading and you are making your money in USD, you will notice that life will be much more easier for you. You don't need to cry about the appreciation or depreciation of naira, because that is basically where everybody is stuck in. Everybody is stuck in that matrix of the government. Just like watching that movie, The Matrix, and you are offered a blue pill and a red pill. Okay, trading is the red pill. You have to take the red pill in order to live outside the matrix. If you eventually stop or eventually say that you don't want to be a trader, it's fine. Nobody will force you to be a trader. But once you settle for the power of your currency, I will also use Naira again as an example. When you settle for the power of your currency, that means you are living your life like everybody else. You are living in the matrix that the government has put you in. So it is left for you to decide where you want to live the rest of your life. If you want to work from 9 to 5, which is actually cool if you want it, it's fine. Nobody would force you to trade. Okay, you choose to live inside the matrix of the government, no problem. But if you want to live outside the matrix and experience what freedom feels like, if you want to actually know or feel what life is supposed to be, then outside the matrix is where you want to be. So keep on practicing, and until the next video, please like and share this video and comment on this video. Tell me what is still confusing you so that I can address them in the next videos to come. And until then, I am still your boy, Hyper JK, the Wall Street resident. I'll see you in the next video. Bye bye.